Welcome to our RM Smart Investing weekly market analysis. I hope everyone has had a wonderful weekend. This analysis is for the December 16th, 2023, with 2 weeks to go. I hope everyone is enjoying their pre-holidays and looking forward to a blessed and a wonderful holidays with the family. Let me start with this saying, because of what is going on in the past few weeks. This is from John Hammerslaw, and it says, a bull market is when you check your stocks every day to see how much they went up. A bear market is when you don't bother to look anymore. And I think most of our investors would appreciate this. And I know I've seen many people who go through that. So what a week it was. I mean, the markets were awaiting the FOMC meeting, and they were not disappointed. There was lots of short squeeze on the side, I would say. There was a big bet, and well, it fired up, and what a week it was. So here's the question, is that in the Fed meeting, at which we will go deeper about the decisions to leave the rates alone, but giving the indication that, well, we could have 3 rate cuts. But I will put this, they're playing the Fed presidents and members, are they playing good cop, bad cop? Chairman Powell was very dovish on Wednesday, and of course the markets reacted, as we shall see in the charts. But then we had the New York Fed president, Williams, comes and says, oh, not so quickly. We haven't decided to cut rates, and this is premature. And the markets reacted accordingly. So I don't know the politics behind it, but I know there is politics involved. We also had the CPI and PPI numbers, and again, it was during the Fed's open market meeting, so we will look at that. So again, the direction is the right direction. This week, though, we have the personal consumption expenditure, which really Fed looks at that for inflation numbers. So be aware of that. So in our again, our slides, we will look into some of the investors' sentiment. Are we overheated? And I go to that 7 weeks up. We've been 7 weeks up, and we are all-time high in Dow and NASDAQ 100. Is this time for a little pause, or is this time for a little reflection of how far we have come? I mean, you will see the charts of small caps, which is something we want to pay attention to. They've been underperformed for a long time, and here they are. Also, remember, we had the option expiration on Friday, which added to the volatility in a way, and huge rolls are happening, and they started then and will go through Monday. So this was one of the largest, again, options rolls, and we look at the open interest of them, and we'll see that also plays a role for upcoming weeks. So let's start with the economy. And again, the week that we had last Tuesday, we have the CPI numbers. It came, it was flat. It came a little bit higher than expected. It was supposed to be flat, but the core CPI, which again, Fed pays more attention because of excludes the food, volatile food, and energy. It was flat. And we also had the PPI, which actually came better than expected, the same with the core PPI. But this was the important thing. The FOMC rate decision was kept at 5.375, which is 5.25 and 5.5. And but it was a language again with the Fed, and it was dovish. And also the retail sales came better than expected. So that was another fuel on the fire. So this coming week, again, there's not a lot happening. You have to remember, this is going to be the last full week of the year. We're going to have 2 short weeks. The Sunday is Christmas, and Friday, not much going to happen. Although I want to pay attention to, well, there's Canada's GDP, but we have this core PCE price index month over month, which I would pay attention. And also we have revised University of Michigan consumer sentiment. So what happened? We've had a pause in the Fed funds rates. This was the third one. So Federal Reserve, they I put down declared victory, projecting a soft landing, and for the years ahead, actually. And they are now, the language says they are gonna have more cuts in the short-term rates. And although their goal is still 2% for inflation, I don't know if that's gonna happen, but they want to achieve this without actually going to a recession. So it sounds like they are declaring that the mission was accomplished, but it might be too early. Now, they didn't change, as I mentioned, the rates, and they did not alter the pace of the quantitative tightening. But again, it was a language, and this the projection about interest rates. So here we look at the policymakers on the Open Market Committee, and none of them, they think that the rates will be higher a year from now. So that's assuring, which is, as I said, is 5.375%. As a matter of fact, what they think is they will do in September, they say there will be one rate cut in 2024. Now they're looking at 75 basis point of cuts, three, and then another 100 basis point 2025, and then another 75 basis 2026. So that's really interesting what they're looking at, and they don't foresee a recession in horizon. So the problem is, although the inflation is trending down, and the CPI came at 3.1%. Remember, a year ago, it was at 7.1%, which was in November of 2022. But again, you have to remember, look at the crude oil, look at the energy prices. They're down 5.4% in the past 12 months. The core CPI, though, it's still up 4% from a year ago, although it was 6% in November 2022. So they are talking about, that 2% target, but we are not out of woods. So the question, they have to have this balancing act. I mean, the market is looking at almost 7 rate cuts in the coming year. So the Fed has to be pretty concerned about how fast and aggressive they will do this. Remember, we lived through the 1970s, and at that time, this was a seesaw prematurely. They did cut the rates, and then the inflation was reignited, and this happened again. Chairman Arthur Burns, before Paul Volcker, and who ignited this again, this inflation. But looking at our long-term rates, looking at the 10-year US notes and UK gilts, you see again, we hit that 5, and then we just broke below 4. Who would have thought? It's so quickly. And also the UK gilt is going down, the same with the German bunds. So we still inverted yield curve. Now the spread and the steepness has actually gone higher. So we have 53 basis point almost. So what kind of a week was it? A great week. I mean, after Wednesday's FOMC, the markets were on fire. Dow Jones was the big winner. They're at an all-time high. Again, not long ago in October, we were looking at the correction area. So they were up 2.93%. NASDAQ was up 2.85%, and S&P was up almost 2.5%. So as a whole, the markets were up 2.85%. And the interesting thing is now that the Magnificent Seven we talk about, they are kind of lagging for the week. although it's still nice to be up 2.25% on the large cap growth. But look at these small caps on fire. You look at the small cap as a whole, 5.24%. So we've discussed this in the past with the lower rates, obviously tremendous help to the small cap because they cannot get a lot of funding, and the funding it affects them a lot more. And also because of the role of financials in there. So they have a major part of the index is financials. This is, I mentioned sentiment. This is might be a little concerning. And this is one of the highest, I think it's the third time I've seen it in past maybe 25 years or so. It's the difference. Look at the movement from the bears going to from 27.4 to 19.3. And remember, the average is 31. And the bulls, the average is 37.5%, yet 51.3. But the concern is this, the difference between the bulls and bears, this is one of the biggest spreads. That's about 32%. So that's huge. And also remember, 1 year for the year on July 19th, we hit 51.4, which actually represented within a few days the high of the market in at least the short term. So let's pay attention to this. So on the CNN fear and greed, we're still in the greed. We are not in the extreme yet. So we are very close where we were a week ago. So just a tiny bit higher. So here's the chart. So I'm going to look at the Fibonacci in from 3 different angles this week. We are looking at more of a recent high, which was end of July to the low of October. And we're taking the retracement from there. And you can see we hit the 127.2%, which is about 47.44. And the day before on Thursday, we got rejected, and Friday we were down a little bit. As I mentioned, it was more of again, Williams talk saying that not so fast as far as rate cuts. But look at this volume that we've had. So again, a lot of rolls are happening, open interest. So it's important, again, for just the healthy markets, we need some retracement. This is huge. This is really vertical, what we've had in the past 7 weeks. And you're looking at this still huge bars, and that's a word of caution in that. On the other hand, I use the extension going back to low of October to most recent high and then the most recent low. And as far as the projection goes, you can see that it could be almost 4,800, which will be close to the all-time high, is in horizon. We are comfortably still above all the moving averages, and there's expanding, and the slope is nicely up. So that could be it, but it will be nice to come back at least to the short-term moving average and touch that, which is our 8-day exponential. The 21 will be even better. So we don't want to be again go up so fast with no digestions, no breathing. Again, there was a lot of short squeeze, especially from the bond size, interest rate size, which helped the markets, the stock markets, the equities. So this is the one we've been using from August of previous year, from high low of that October. And you could see that this had been a challenge on the 138.2%, and we broke above that. So that again gives us another objective of 161.8, or target at 4840. Again, 4800 area is our all-time high. When we look at the Bollinger Bands, we are getting back to embedded. MACD is still up, but we did go outside the Bollinger Band on Wednesday and Thursday. Now we just slightly come back in. When I look at on a weekly basis, now this is where we are, about 4808 is all-time high, very close to that. We did touch the Bollinger Band. On a weekly basis, though, we still overbought. So this line is not hasn't been there for 3 days. Although, you know, a few weeks ago, I said the MACD is about to move up. So across, and that was the positive. We bounced out of 100-week moving average. How wonderful is that as far as, you know, seeing the support. NASDAQ has been a little more flat, and again, these big caps, we are overbought, and MACD is positive, but it's kind of a flat positive. Now, Russell has been on fire, and we mentioned about once we broke that 100-day moving average, and then we were overbought, and then this week we came back, and now we are embedded. MACD has been telling us that positiveness. The trend was not positive yet, but momentum was positive, and then now the trend has become positive. So that's the strongest. But these are big bars, and again, there's been some money coming in, but also there's been shorts getting stopped out, and the problem is that we are outside the Bollinger Band, so we need a little digestion there. On a weekly basis, we just broke above the 100 weekly moving average, but we are overbought. MACD just crossed over, but we are hitting that Bollinger Band. So let's see this week how are we going to behave. Are we going to stay above that 100-week moving average? And the Dow has been just the superhero, really. Touching the Bollinger Band. So I would say, you know, be a little cautious on that. But how beautifully we've been embedded for all these days, and MACD has been positive. The same thing with like Russell, we are touching that or going outside the weekly Bollinger Band, and we are overbought. So we need another week to become embedded. So let's see if the Bollinger Bands will open up. MACD is positive on a weekly, so it's still good. I want to dive in deeper on YM and look at a lot of moving averages. And basically, when you look at on a weekly, you see how nicely, again, end of October, we were talking about this. We touched that 200 weekly moving average, and we bounced back, and that was a huge support. We had done that again the previous year's October, which was a reversal, one day down, the next day above it. So pay attention to these long-term moving averages. Oh, the caution is this. We looked at the Bollinger Band, but I was looking at the linear regression channel on a weekly basis, on a 30 and 100 week, and you can see, you know, again, we've come a long way. We are getting a little stretched. So let's be aware of where we stand right now. Also, I looked at the monthly, and you see again on a monthly, we had gone outside, came back inside, and here we are hitting the 2 standard deviation. Just a food for thought. Transportation, of course, we talked about transportation, how it's important to look at them as a leading indicators, and we have broken above the 100-day moving average and the 18 just crossing the 100-day. So that's good news. But we are overbought on a daily. MACD is positive, and we are outside the Bollinger Band, so we need to digest that. VIX, pretty low, but again, it's stabilizing. All you need is one move, and we are oversold. So, but look at the Bollinger Bands are really narrowed. So, are we coiling? Are we waiting for something which could happen? So, be aware of that. Now, this is really the big catalyst, the 10-year yield. We were not long ago, we were at 5, but now we've broken below 4. And we are outside the Bollinger Band. There is a doji. We are oversold, but the MACD is still down. So is this possible? Maybe we will have a little bounce and at least digest it. So we don't want to completely collapse in a sense. We rather have the gradual just digestion. So there is a doji, could go up a little bit. So I would not short the yields right now. Or what I mean by that is I would not go long on the weekly. You can see we are actually hitting the Bollinger Band, and we are oversold. So it could be a little bounce, but MACD is negative. What I meant by that is again, there is a chance that we might bounce back a little bit. So I will hold buying bonds at this moment till maybe a little more confirmation. And then the way that the 10-year yield is looking on the moving averages, we broke below the 200-day moving average. So this tells us that there's more lower rates on the horizon. So which means that the 10-year could be a place to go. But on the 10-year, as you can see, we are above the Bollinger Band. So that's why I meant we want digestion. We are overbought. MACD is positive. That's good. And the 18-day moving average has crossed over 100-day. So I just need a little more of digestions before the next run. On a weekly basis, you can see we are hitting the upper Bollinger Band and we are overbought. So MACD is still positive, so that's good. We are above 18-week moving average. So we just need a little more, cautiousness rather than, another week that we had like this week. The same thing with the 30-year bonds. They are outside Bollinger Band, so, but everything else looks positive. The dollar, of course, we talked about the rates, and as the rates are going down, it's affecting the dollar. And dollar, actually, what happened was uh, the euro decided to stay put. Most of the central banks decided to stay put. As a matter of fact, UK still not sure what they're going to do. Bank of England, they are still thinking they might increase the rate. So basically, that doesn't bode well for the dollar. And we had this after hitting the 100-day moving average. We talked about this last week. We said be cautious on that. We were overbought, and then that's what we had this collapse. Really, we did go outside Bollinger Band, and that's when you stop. You don't want to short it, and we had a Friday's bounce. So again, that was after Fed member of and New York Williams saying that not so fast on rate cuts. On a weekly basis, also I want to pay attention that we are sitting on a 100-week moving average plus the Bollinger Band, and we are oversold. So we might need to have a little short-term bounce on the dollar. As I mentioned, the euro decided no cuts. So actually Thursday was an up day, and then Friday, again, more of a relations to the Fed president's talk, and we had a reversal. So we are sitting right at that 80-day moving average. Momentum is up, and MACD is trying to cross. As far as gold itself, again, gold and dollar and what is happening with interest rates, we did have again, some profit taking. We did have waiting for what the Fed is going to do, and you can see it was a big doji in a sense that happened, and we had another one on Thursday, and then Friday we had the talk, and we are parking right on the 18-day moving average. So we are oversold. So that's, and we have this big support at the 100-day moving average. Silver did a little better, and we are above the 100-day moving average, but again, we are looking at that 18-day moving average, and we are oversold still, and MACD is trying to cross. Copper. Copper had last week we bounced back. That 100-day was a resistance. Momentum is up. MACD is flat, trying to go up. Again, China's trying to stimulate. So there's some money came to the copper. As far as Bitcoin, we talked about this last week. We said be careful with when the markets go outside the Bollinger Bands and more of a technical, it really overheated. So we came back where to 18-day moving average. So the trend is still up in a sense that we're still above 18-day moving average, but we needed, again, a little digestion, and still looking at the BlackRock January 10th ETF. We'll see what happens, but we are overbought, and MACD is pretty flat. So but we still above 18-day moving average. As far as the weekly goes, again, we were outside that Bollinger Band, and this week we came inside, but we are embedded, and MACD is positive on a weekly side. Last but not least, crude oil. Goodness, it's been going down, but we are digesting. We hit the Bollinger Band. We bounced back. We are under 18-day moving average, so that's creating a resistance. But we are getting a divergence here on the stochastics. We are oversold. MACD is crossing. So could this be a little support? Is the cold weather coming? And as far as the supply, what's going to happen? So basically, it's an interesting place to take a look at crude oil. The expected move was interesting. For the last couple of weeks, we've talked about that we hardly have had any times that when the markets did not hit the either edge of their expected move. Well, this week we went crazy, and we were on a big gamma squeeze and the short squeeze, and we moved up to the 52-week high of 47.38 on S&P. Was 2 standard deviation move. So that's outside. NASDAQ, the same story. Got a 2 weeks high, an all-time high, and then Russell, huge 52 weeks high. When was the last time we said 52 weeks high on the Russell? Look at this movement. It's unbelievable. From $161, we are all the way to $200. That's $39 movement. And this huge bar outside the expected move. And again, we've been, back a couple of weeks ago, you see we were right inside without touching. The same story with Dow. Look at this huge bar and the big movement. And again, this is almost parabolic. So we really need some kind of a digestion. The bonds, the same thing. And that has been, outside the expected move by 2 standard deviation. On the other hand, the dollar behaved more rational in some ways. It's a huge broad expected move, but we hit the lower edge and bounced back on Friday. The same with gold. We hit the lower edge, big bar on Wednesday with the rate decision, went outside and finally came back inside. Silver had a huge bar from one end to another. What a move! What a day trading play this would have been. Of course, the FOMC is a pretty difficult day sometimes. Especially silver, I would not play futures on silver. We could have played options perhaps, but we did go outside, and we still finished outside the expected move. And of course, financials loved what happened on Wednesday, and we stayed outside 2 standard deviation. Even energy had a good time, and they stayed outside their expected move. I'm going to go a little extra this week, just look at the whole Ichimoku on my workspace, just give you a little better understanding of looking at the markets for the next few weeks. So I start with the S&P. This is the spiders, the ETF for S&P. You see this could be a reversal, at least in a short term, could be a morning star. And we see that we could have a support at 464. So there's a little support here and support here, but we are comfortably above the clouds. And look at the DMI positive is way above the negative. The same thing we had crossed on a weekly basis, comfortably above the cloud and the turning and standard line. Same thing in the monthly. The DMI positive is up, and we are above those. And then even on the 60 minutes, we see we had the reversal. We close that gap, and then basically what we have is we are sandwiched, which I talked about this, about standard and turning line, but we are above the clouds, and the DMI is positive. So this is more of a reference. The same thing, you can see the QQQ, NASDAQ 100 ETF, and it's nicely up. The same thing on the weekly. All of these, we are basically up on the monthly, weekly, and daily. the Russell, the same thing. We look at the Dow again. You see that the monthly we just crossed in November we crossed the negative. We have on a weekly basis, and then on even 10-year notes on a weekly we are the below the cloud. That could be a resistance, but we broke above the standard line. So remember, we were talking about 50% target first. Then we hit that, we parked there, and then we moved up. Be aware on a monthly, though, we are against the turning line, and the negative DMI still in control. So on a monthly, we still have a downtrend trying to reverse that. On a weekly, we just broke above on the positive. So a food for thought. Dollar, on the other hand, you see we have broken below on a daily, below the cloud, getting a little support on the cloud on a monthly, on a weekly, and on a monthly, we are right about standard line. On a weekly, we are getting to neutral zone, although on 60 minutes on the neutral zone, but the DMI positive is also positive. And the gold, we see gold had this big reversal, if you recall, and on Sunday night, and now here we are, but positive, above cloud, positive, weekly still positive, but we are inside the cloud, and monthly is above the cloud, and the DMI is positive. Last but not least, crude oil. As I mentioned, just pay attention to crude oil, all right? If maybe could be a perspective for a trade. We just broke above the turning line. We are sitting right on the lower edge of cloud, but again, the DMI negative momentum is above, so it could be a short-term bounce. So, but on a monthly though, we are above the thin cloud. So on a 60 minutes, we are above, and the DMI positive is trying to cross the negative. The same thing on the 30 minutes. So anyway, I hope that was helpful. It's a little longer than it took, but I thought it would be good to have a little extra analysis. With that in mind, we're gonna move on to our second segment, which is our lesson of the week. Thank you so much.